All right, guys, Anthony here from the Edge Trading Group. I want to talk about heat maps and thin spots. Here you see a heat map. On a heat map, when it's bright, when it's a bright line above the market, it's because there's a lot of resting offers. How do we know it's resting offers? Because it's above the market. Price is down here. The bright line is up at 80 even above the market, and because it's bright, there's a lot more resting offers and sellers than there are around it. Why does that matter? I want you to know and remember the word magnet. Just think about it. When there's a lot of buyers, where do they go? They have to eventually go to where the sellers are. If you're going out to buy a car, you don't go down the block to buy a car from your neighbor. You go to a car dealership. So oftentimes, if indeed there's enough buyers, they're going to have to follow price and find the sellers. Okay? That becomes a magnet on a heat map. Now let's look at a thin spot. If you introduced emotion to these buyers, then they climb all over each other and create a thin spot where there's a rush to find selling. How many times are you trying to cover a short and you have to buy it and you're missing your exit and you're getting frustrated? Or you're trying to open up a good, nice long position, you miss, you hesitate, and you're chasing that market up. It's because there's a lot of people stuck trying to buy it and they're climbing over each other to find what? The sellers. Then the market hesitates or creates a nice target where that selling is, right? Does that make sense? Heat map and thin spots. Now let me bring over some slides and show you guys this with a really cool analogy. Let's take a funnel and turn it upside down. The mouth of the funnel is down here, and then the neck is right there. In this story, these guys here on the left will represent the buyers, and cars will represent the sellers. All right. So let's say you have a lot of buyers down in here, but you also have a lot of sellers, right? A lot of cars that are willing to satisfy those buyers. So price on a chart is going to seem to chop around in this case if you're looking at a live market. Now, if the sellers leave and yet there's more buyers, they're going to look to see where the next level of inventory is. And if it's higher, you're going to fill this funnel up. And you're going to create a motion of, I want to get these cars. That's the next price. I don't know where the next price is going to be above there. And all of a sudden, you get a thin spot. You could literally or figuratively see the thin spot on this funnel when everything gets trapped down to this neck. And that's the same concept that applies to a thin spot, where there's a little volume below, volume above, but it's thin in between because the speed picked up, right? The tempo picked up. Well, the edge zones mark that with green if there's a lot of aggressive quick buyers that come in. And that's what's showing you real-time support and resistance. Support in this case. Always tracking thin spots. And I think a weakness of traders when they get in this business is they don't realize that they've been using these techniques as consumers their entire life. Everybody here listening to this video has bought and sold something. And all the time. Cars, plane tickets, houses. So don't ignore those concepts, those techniques. Reapply them into trading S&Ps or crude oil future. Anything with a price attached to it is going to be affected by this dynamic of when there's emotion. Where is it? How do I mark it on my chart as good support or resistance? Where can I see in a heat map? Because heat maps are great charts if you know how to read them. How can I use a heat map to see where the next magnet might be? And I know people are going to have the question like, well, Anthony, what if I see some bright lines above and below as far as sellers resting above, buyers below? Well, that's the key. That's where you got to introduce context and look at something else to show you where and what magnet's going to be elected first or where we're going to go first, and that helps shape your bias. There is a difference between edge zones and heat map levels. Heat map are resting buyers or sellers, and edge zones are where the buyers and sellers came in aggressively quick and moved price. So I hope you guys understand that logic and these metaphors. I think it's really helpful when you can understand how price moves and why price moves in order to trade it effectively. Subscribe, leave a comment, and we'll see you on the next video. Thanks for watching.